Hello, everybody. Good afternoon. Thank you all so much for taking the time to join us on the webinar this evening. I am super excited to be able to go over the Nashville market with you folks, as well as with our amazing partner, Chris Trout, who I'm going to be introducing shortly. Nashville has been a great market for us. It's been a great location that provides steady flow of quality tenants and a good pace of appreciation over the last few years. And according to recent data, we're expecting another solid year of growth. So really looking forward to diving into some of the information with Chris on the basics that make Nashville a great place to invest, as well as share some of the new upcoming developments that are going to help enhance the city. A little bit more about us here. Sorry, I'm moving a little quick. I wanted to do a quick intro. So for those of you that are unfamiliar with Marshall Reddick, Marshall Reddick is a full service real estate firm, and we have 4 primary services that we focus on. We have our real estate brokerage, our property management, our private money lending options, as well as our investment funds. So for our real estate brokerage, we help people buy and sell, whether it's a primary residence or an investment property. And 99% of the folks that do buy an investment property are going to need property management. So we offer those services as well. And that could be anywhere from marketing the property for rent, doing showings, tenant screenings, any kind of repair or requests, repair for requests, as well as the tax information at the end of the year. We want to make sure we provide all that data so you can give that to your CPA and you know how those numbers are going to look. And in addition to that, we have our private money lending option. So essentially, we provide private money for those individuals who may not fit into the conventional loan box, right? So let me give you some examples of those. That may be individuals who are looking to do fix and flips on homes, maybe those individuals who have self-directed retirement accounts and are looking to leverage and purchase property. That would be another good, example of a borrower. And maybe those that have more than 10 finance properties. Those are also individuals that seek us out to provide financing so that they can acquire more real estate. Our 4th service is our investment funds. So as it's the flip side of the coin to the borrowing side, right? So as you know, when we have, for every borrower we have to have lenders and folks that fund those loans. So we give our investors the opportunity to lend their capital. So instead of collecting money from rent and collecting rent checks, you would collect mortgage payments. And you can do that through our Marshall Reddick Mortgage Fund, which is a debt fund that we offer. And it's basically a really great, secured, and safe way to leverage your capital and lend your money to those first position trust deeds across the country. We do all of our in-house underwriting, and those investments are spread across the whole country. So there's quite a bit of diversity there that allows you to have a secure, steady, and safe type of investment in lending. So that's a little bit more about Marshall Reddick for those of you that may be unfamiliar or don't have a really good understanding of what we do. Some of the topics that we are going to cover tonight. So we're going to go over, the Nashville market, what makes Nashville great. We want to also talk about some of the surrounding areas. We're going to introduce our team, myself as the advisor, and, as well as we're going to go over some properties as well and some example pro formas. So for those of you that haven't been to one of these presentations or haven't seen the Nashville presentation, we're really excited to show you some of the new stuff going on, as well as identify some of those properties that we have there. So here is our footprint, right? So these are the markets that Marshall Reddick operates in. So we're located across 5 states across the country, but we're going to be focusing this presentation, as you know, on Nashville, Tennessee. So all of these highlighted areas, or all of the pinpointed areas that have a city name by them, are markets that we have a physical footprint in. So whether it's agents, boots on the ground, or property management, we have a like I said, physical footprint to help and assist with any investments or acquisitions that you may have in any of these markets. So again, these are our top markets, and all are very attractive for different reasons. And again, tonight we're going to be talking about the Nashville area and some of the surrounding suburbs that make Tennessee a really great place to consider when investing. So how do we choose these markets, right? I think we would all agree that not every single market across the country is a great place to invest. So, we've taken the time to vet out some specific markets that we want to focus on, and some specific metrics that we think are valuable. And this is what that key criteria looks like, right? So we want a strong job market. We want to make sure that there's employers in place so that your tenants are able to pay rent, right? That is first and foremost a critical part. We're looking for markets that have low vacancy rates. Ultimately, you want economic diversity in that you don't want to be reliant on one industry or one employer, as you can, as if something were to change on that front, that could be pretty detrimental to your investment. And then housing affordability. So for those of you that are, like myself, I'm in Southern California working out of our Newport Beach office. For housing affordability, that's a really challenging benchmark for us here, right? Just where prices are. So finding a market that is more affordable is definitely something that we seek out, and Tennessee has that option. Now, Nashville does have their higher price points, as we'll see, and those of you that may have looked into it, but there's definitely opportunities as you get into suburbs and in other parts near Nashville that I think make a lot of sense. So that is something that is crucial to how we choose some of these investment markets. Ultimately, landlord friendly is also very critical, right? Not to keep picking on California, but for those of you that are here in California, as you know, it's a very much more tenant friendly state, and all of the other investment markets across the country that we have a footprint in are landlord friendly, and much more advantageous for you as an owner to remedy any situations that are not favorable to you. Strong education is also really important. We want to make sure there's good schooling. And then last but definitely not least, and I'll be covering this later, is reliable property management. So this is definitely something that, whether it's, even if you're driving distance to your property, I totally agree with getting reliable property management as a way to maintain and create the best use of your space, and make sure that the leases are being enforced, and that the property is functioning as it's intended to. So that is how we chose this market and all the markets that we operate in, and that's something that we stand by. So without further ado, I'd like to introduce you to Chris Childs, who is one of our top Tennessee agents. He's been an incredible resource to myself as learning more and more about Tennessee, and as well as to all of our clients. So Chris has been, like I said, an amazing a partner of ours, and I'm really excited to have him on the webinar tonight. So Chris, thanks so much for joining, and happy for you to take it away.
Absolutely, thanks, Vince. As we were updating slides, I totally forgot to update this one. As we can see, this says I've been a realtor for 7 years. I actually just hit 9 years this month, so big times. But anyways, I'm a realtor in the Nashville and Clarksville area, so I'm your boots on the ground agent. I'm the one that vets out properties for all my investors and sources those deals for you from all available options. So couple hundred homes sold, not to brag, but that definitely has given me an edge on knowing the areas, knowing the hot spots, and making sure to stay on top of those trends for my clients, so that you're buying in the best mix of those areas. I do try to find properties and not just sitting around waiting for them to hit the MLS. But I've networked with for sale by owners. I have some wholesalers in the area where we occasionally find some deals. So doing whatever it takes to find my clients the best properties. And then finally, I do own investment properties myself. And so that really helps give me a good lens, to look at things for my clients and be able to evaluate them from the same eyes as if I was going to be the one to buy that property. And so, yeah, a little bit about myself, my family. So we added one more last year. He actually just turned 2 in December. So time's flying. But these 3 homes that you see on the right, that's our primary just south of the Sango area of Clarksville. And then we have a rental property in Pleasant View, closer to Nashville. And then we just bought uh, a rental property near downtown Clarksville. So easing in both directions, but definitely we'll be focusing on the Nashville market for tonight. However, with that said, we are our brick and mortar office is actually based in Clarksville. So it's about 45 minutes to the north west of Nashville. But we do have dedicated property management team for the Nashville market. So we're able to service both of those places without any problems. And as Vince mentioned before, and just like all of our other offices that we operate in, we have everything under one roof. So you've got me over on the sales team, we've got our property management staff, obviously with the property management team, we've got private lending available here locally for properties in Tennessee. And then also, it's not in the list here, but we do have our own maintenance division as well. So we're able to handle projects and renovations to properties that might need them upon closing. So we're full service, and as it says, one-stop shop. So I'm pretty proud of this award. We actually just got voted the second best real estate company in Clarksville. Again, we're hitting on this. I know we're talking about Nashville tonight, but because we're based in Clarksville, we do have a big footprint there as well. So as a company, though, that's really big news. We've only been in operations a little longer than that here in Tennessee. So we're definitely becoming a top player when it comes to both real estate and property management. So here again is just a map visual to show you our 2 main markets here in Tennessee. We've got the Clarksville area and then the wider Nashville metro area. So we have started acquiring quite a few properties from property owners in Nashville. We've sold a great number of properties around the Nashville area, and we're just continuing to see that portfolio grow. In the area, though, between Nashville and Clarksville, we are right at 400 homes under management. So we are growing very rapidly here in Tennessee. Okay. My mistake, guys. I will hit the highlights since we're not looking at the chart from December, which I intended to show you, but it's actually pretty close. The numbers trended and the maps trended very similar. The market didn't see any major decreases or increases really since the interest rates started to peak in and around August. And in fact, we've seen these numbers improve to where the month supply has stayed about the same, but we are seeing a turn up again in the median sales prices. And that was due to the recent news, which brought interest rates back down, where we started to see that spread between the 10-year treasury yields and interest rates and everything started to come back down after the Fed's last meeting. So we expect that trend to continue this year. Especially here in the Nashville market, where inventory has been the big thing. Sales overall across the nation are down, just like here in Nashville, but so is inventory, and we're really at record lows right now. If you look back over the past 5 or 6 years, The number in available homes is much lower than I think demand will hit, maybe mid to late 2024. And if that happens, if we see those interest rates come down sharply, we're going to see the buyers coming back to the market, and we're going to see prices go up because inventory is just not there. And I don't see any real indications that we're going to see a major flood of inventory. There is a good number of builders that are putting up some new construction, but because of the tightening lending practices, that's also reduced the amount of new construction inventory that's hitting the market. So I think it's going to be an interesting year. And with that said, also just reflecting on some recent conversations and market reviews with other investors recently, looking at Nashville, we are already kind of starting to see those prices, like I said, turning back up. So
Yeah.
now still, go ahead, Vince.
Yeah, I was going to say, Chris, for myself, I look at most markets across the country, right, and not is specific to one market. And I can tell you that just across the country, I've noticed an uptick of interest in kind of some more folks that are recognizing that there could be an improvement in rates. And while the market is still soft enough to quote unquote get deals, right, or get those incentives from sellers, they're jumping in now with the hopes of like when rates do come down and just taking advantage of a refi. And I'm wondering if you're kind of seeing that in your market and seeing folks that are now getting off the sidelines and starting to move a little bit more, who maybe 6 months ago were firms sitting out.
It's true. Yeah, I've had, December was pretty flat in terms of new business. But just since January hit, I've had buyers who had been, exploring the market come back around, and now they're getting more interested. But I'm also seeing that in the primary buying market as well, where homes are starting to go under contract faster. We're seeing days on market already starting to trend back down. So it's very likely, in my opinion, that we'll see sort of a tipping point at some time this year where pricing is going to turn back up sharper.
We had a quick question that came in about the month supply of inventory in that number 4.1 there. Do you mind just kind of just briefly highlighting like what that represents?
Sure. The graph on the bottom left.
Yeah, just on the where it says month supply of inventory in the 4.1 under August 2023.
Absolutely. So that really is considered the absorption rate. And that's essentially the number of months looking over usually a 6 to 12 month time period. I believe for this calculation, it's a 6-month time period to see how many homes are selling versus how many homes are available. And so we have seen the total months of supply of inventory. So basically that's saying that right now we have about 4 months worth of inventory. If no other homes hit the market in the next 4 months, it would take about 4 months for all of the available homes to sell.
Right, based on the volume of acquisitions that are being made right now.
Exactly.
Yep. Nice. Thanks for covering that.
Definitely. All right, moving on. So this is a little heat map to show pricing generally in areas around Nashville and the outlying suburbs. So obviously, as you get into the downtown core of Nashville, that's where we're seeing, prices kind of starting around the 600s and just going up from there. And so these are reflective of entry-level pricing for homes in those areas. Further south of Nashville is definitely more affluent. It's where a lot of the musicians and sports stars and entertainers, that's where they choose to live. And so that area has appreciated pretty steeply to where the entry level is almost $1 million. But when we look to the east and north, and then really also to the southeast of Nashville, we've got some really good options where homes are still affordable. They're in the low to mid 4s for some entry level homes. And and they still command great rental prices. So that's where the homes that we're going to mainly be looking at today are located in those areas around the 4s to low 5 range. All right, getting a little more specific with Nashville, population just continues to explode. We've hit over 2 million for that greater metro area though, but the median age has stayed pretty young, and we continue to see, younger demographics moving into the area for just great job markets, a very fun city to live in. There's always something going on, especially if you love music. There's live music going on 7 days a week. Even with the snow that we just got here, which shut most of the city down, I'm sure you could go out and find some live music. Median income though is pretty high for the national, comparing that to the national average. So you've got high income earners moving to the area that are most likely going to stay in the area long term and just continue to grow our population and increase property values as well. Overall though, across Nashville, we do still have a pretty high home ownership percentage where it's not just flooded with rentals. We do have some large apartment complexes and larger rental developments, which contribute to the tenant percentage there. But overall, if you go through neighborhoods and you drive the more desirable parts of town, you're not going to see a big flood of rental properties. So it's still a lot of potential for investors to receive cash flow and appreciation in our market. That medium home price though, it's still pretty high when you compare that to those outlying suburbs that we saw briefly on the map before. Mid 5s though, anywhere near downtown is going to be like entry level pricing, and so for most people the numbers may not make sense, so that's why we want to explore some of these suburbs that are just right outside of Nashville. So some key facts: home values definitely exploded over the past couple of years. We've seen pricing going up by 10 to 20% year over year. Last year being 2023, we did see a positive about 7%. And then the year before was when we saw that much bigger percent increase there, closer to 20%. Rents though have also continued to increase. We've seen 10 to 20%, increases on some rental properties. And as the market has become somewhat more unaffordable for primary buyers, we have seen more renters coming to the market, and rental demand has remained really high for our area. If you haven't seen Nashville in the news, you're probably not watching TV, but Nashville is definitely keeping top news. We always seem to be #1, or at least in the top 2 to 3 cities for various rankings, places to live, hottest job markets. But Nashville does continue to grow very rapidly. So again, just a quick recap: our local economy has not just one, we're not just dependent upon one type of business. We may be known as Music City, but we also have tons of healthcare, lots of manufacturing jobs around the area. We've got military base close by, and just a lot of tech companies even are moving to the area. So very diverse job market. Overall though, compared to the nation, it is pretty low cost of living. One of my favorite things, and some others that have moved to Tennessee from places like California prefer that we don't have a state income tax. So there's no additional tax, whereas some of the surrounding states around Tennessee and many states across the country do have an additional income tax. So that's a savings. And then again, the income for Nashville is about 20% higher than the US average. So really great numbers and really great economy here in Tennessee. Well, we have several of the top sports teams now. So we just have a minor league baseball team. We did get a MLS soccer team, which is super awesome. We saw the Nashville Soccer Club move into their new stadium a little over a year ago. And then, of course, we have the Titans. We've got the NHL team, the Nashville Predators. And there is news of a potential baseball MLB stadium and a potential MLB team in the next several years that could be relocating to Nashville. So I'm a baseball fan. I'd be super stoked if that happened. But got a lot of sports teams that are coming to the area. And this was one of the biggest announcements that has come out for a local team recently. But Nashville City Council, they have actually approved this project. It's an estimated $2.1 billion new Titans stadium that is in the early planning stages, but is moving forward. So that was major news for Nashville.
Yeah, that's super exciting, Chris. I know the Titans are such a huge part of Nashville and have been for many, many years. And out of curiosity, I was reading through some of this. It looks like this is going to be just right next to the existing stadium, or
Very close. I don't know the exact parcel, but yeah, I know it's not very far at all from the existing stadium.
awesome. Yeah, and I'm sure this
Yep.
is going to keep quite a bit of folks busy with the development of this stadium and the jobs that this is going to bring in the construction, and not to mention the events and the the things now that are going to be concentrated towards utilizing this new venue. Like I see here a Super Bowl and obviously with all of the concerts there. So yeah, I can see that being a huge win for the community.
It really was. And as you'll see on a slide just ahead, I hope I included it in this presentation, but I do know the location of this is positioned very close to the new Oracle headquarters, to Oracle technology company that's moving to Nashville as well. And that was a multi-billion-dollar project as well. So, I mean, just a ton of capital being invested directly into Nashville. So hitting the highlights, this is a small portion, but some of the bigger well-known names of companies that are located right in or very close to downtown and around Nashville. So we've got auto manufacturing in different capacities. As I mentioned, the Oracle headquarters is moving here. We've got healthcare, very well known for that. And of course, music and technology are continuing to grow it all the time. But in addition to the businesses, we've got a good inflow of smart minds. We've got a number of top universities that are located right in and around the Nashville area. So Vanderbilt ranked top 20 of all national universities, and that is right in downtown Nashville. Belmont, of course, a very prestigious school, well known for its music, and the music programs there produce a lot of new artists that have become famous. Lipscomb University, another private college right in Nashville, and several other large ones that are around the area. So when you have a lot of universities surrounding an area like Nashville, that again leads to that growth, keeps the average age down, and that new thought process and everything just continually churning over. So
Yeah, and just to highlight, some of the two of the things that were on that list of, a list of why we invest in certain markets is, economic growth and job opportunities and strong education. And I think that, Chris, you've definitely touched on a lot of those things, right? And all it's definitely aligning with some of the overall methodology of why we choose markets, and Nashville is definitely proven to support some of those that key criteria that we focus on.
definitely. So again, here's just a glimpse of another multi-billion-dollar development here that, I mean, it seems like every couple months there's another one that's hitting, but there's a vision to develop the North Nashville area. So this is sort of an artist rendering of what that might look like in the next 10, maybe 15 years. But all around the downtown area, they're just looking for expansion. Uh, the downtown Nashville area is sort of isolated by the river, the Cumberland River that you see in the picture in the top left corner here. So one of the challenges and hurdles that I know has to be overcome is additional bridges to connect these new areas to the existing downtown and just help with traffic flow and traffic patterns and all of that. So there's a lot of planning, I know, around that as well. But the city is very invested in trying to expand and grow out like some of these visions show. Now this the East Bank project is this is all moving forward. So these are all things that are in various stages of construction, mostly still in the planning stages, but all of these projects have passed and are moving forward. So, oh, and this answers our question, Vince. So it looks like that's where the new Titan Stadium is going to be. It's going to be on the east side of the Cumberland River, where the existing Titan Stadium is actually on the west side currently. So it's still very close, but it's going to be built into this entire new development where you've got 4 billion at least pledged of development, but probably much more than that going right in here outside of the existing downtown.
Awesome.
Just another rendering, but showing how the downtown has continued to grow and expand. Right now, just was in Nashville yesterday, or sorry, not yesterday, but a couple days ago, and the cranes are still very prominent. I mean, there's at least 10 different cranes building, high rises all over, but it just continues to grow and expand here. All right, well, let's get down to what the point of our call and meeting is tonight here, and that is, where are we going to find a great investment property? Where are some key locations around the Nashville area? And so without breaking the bank and buying in that $600,000+ range near downtown, if we go just a little bit to the east of downtown into a suburb or area known as Hermitage, that's where we're going to start to find homes in that lower 400 to mid 400 range that are going to be great properties in family friendly areas. There's a lot of parks, the schools are ranked good in that area. Neighborhoods are overall considered safe, and still only about a 15 to 20 minute commute into downtown or to the airport. But it's a very good location. So that's definitely an area that I would recommend to take a look in. There are various developments coming in all around the Nashville suburbs that we were talking about. So Tanger Outlets was just built near the south of downtown. We've got a new mixed use development called Century Farms that's also to the southeast of downtown, and new builds popping up all over the area. But here's a brief look at what that looks like. The Tanger Outlets and where this community is very close to the new MLS stadium that they built for the Nashville Soccer Club. They've expanded the interstate there, added a new exit just for this development. And again, this one is to the south of Nashville. Back to almost the direct north, a little bit to the northeast of Nashville, you'll find the suburb known as Madison. So that's another great place that we'll take a look at some properties in, and that always seem to have great deals there, especially if you're an investor that likes some built-in equity, where we could find a home that maybe needs just some new flooring, some paint, things like that. Madison is a great area to find properties that just need a little bit of sweat equity and would give you a really good return on that investment. One last quick look at the appreciation trend. Again, Nashville, just like most markets, took a sharp turn over the past several years, and we saw, that go up quite a bit. But contrasting that, I do like to point out, if you go back on our timeline on the graph on the screen, and you look at the last market crash, the national crash in 2007, 2008, you'll notice that Nashville's market did not really crash at all. It came down slightly, 3, 5, maybe up to 8% in some places, but that has quickly turned back up, and now all of those people are well into the positive range that had properties from that time frame. And I think we will continue to be sheltered in the event that there is another downturn like that, because of all the stuff that we just looked at, all the jobs, all the growth, the diversity here is definitely going to continue to keep the market stable, I believe, in Nashville.
And Chris, one thing I wanted to point out before you go to the next slide is just the property classes on the bottom left corner. I'm sure there's going to be a slide here where we talk about our ebook, but for those of you that have been looking on our website and have been exploring properties, you're going to notice there's a property class designation on every property on our website. And basically that is connected to the specific market, right? And it's based on the median home price within that metropolitan statistical area. So in every market that we're in, it's not, there's going to be different price points that constitute the brackets of luxury A, B, C, D. So you'll see here, right? The A class range goes from that median home price, which you'll see that 100% representation, that 100% figure. So 349, 500. Up to the luxury, where luxury starts, which would start at 454. So you'll see anything in that A class range is in that between those prices, B, C, and D, and so forth. And then the breakdown on the scale below is just applicable to multifamily. So if you were to have 2 units, it would just be per unit. So it's just something for you guys to take a peek at, so that you're aware when you're looking on our website and you're seeing those property class designations.
Perfect, thanks, Vince. All right, so the properties we're going to take a look at, I wanted to give you just a broad view of the market, and by no means are these the only properties that are available. These are going to be just some simple examples. And if you do have questions about these, they are properties that are available. But I would love, Vince or I would love to connect with you for a call to really unpack maybe what you're looking for a little more, because we can find lower price points maybe than what these are going to reflect. We just maybe need to explore some of the outlying markets. So no further ado, let's jump right into some available properties. The first one I wanted to start with is it's an older home. So this home has been renovated. If you looked at the photos online, you'll be able to see what some of those renovations look like. We've got a link to that on our website under the Nashville properties. But the home was built in 1987, so it's definitely not a brand new property. But the space, the location, the level of renovations that they've done, the available square footage in this property, commanded rents around $24 to $24.50 in this neighborhood. And so looking at the list price, which again, it's just that, it's not a price that we've negotiated potentially. This also doesn't factor in any potential credits that we might be able to have negotiated for a seller. So those are the kind of things that when you connect with Vince and I, we can help you really craft the deal to look even more favorable than this one. But on surface level, just looking at the numbers as they are, considering the list price, factoring in a down payment of 30%, and using the rent for this area neighborhood, this property after your fixed monthly expenses would cash flow around $182. So month over month, that's the check that you would be getting in the mail. That's after we take our property management fees. That's after you've paid the mortgages, taxes, insurance. Everything's free and clear at that point. So that's the expected monthly cash flow.
And Chris, just to point out, one of the struggles, and this is across the country right now, is getting that monthly income or that cash flow after fixed expenses up, right? And
Right.
a big part of that challenge right now is interest rates. As most of you folks have probably seen and followed it in the news, interest rates is probably our strongest headwind. And we do expect that to be adjusting within this year, right? Whether it's later in the year, more Q2, Q3, but there is, slated to be some improvements in that, and that's going to ultimately improve these numbers. But alongside of that, like what Chris was saying in the beginning of the presentation, as those rates come down, we more than likely will see that price point potentially increase as well. So to settle, for lack of better words, at something that maybe breaks even or makes a couple $100 is a really good way to position yourself for when and if there is a refinance opportunities to have those numbers, greatly improve. So I would say, just to keep that in mind, because that is ultimately the tug and pull that we've been going through, which is rates and price points. So I just wanted to point that out. And we have an amazing preferred lender that we work really closely with, that if you guys are curious to just get an understanding of what your current rates are and how to effectively adjust them based on whether it's paying points or bigger down payments or lower down payments, and just seeing what that looks like, we'd be happy to go through that exercise with you guys.
Definitely. I know it's a roll of the dice a little bit when I think about that and just the overall market, because like you said, if rates do begin to come down and we see that flood of buyers, it's just economics in my eyes where we see that pricing quickly start to turn back up, and these incentives begin to go away. Right now, thankfully, I've still been able to negotiate in recent deals for sellers to offer these credits. But I did notice when just kind of doing research for this presentation and looking at some of the new construction options that builders, last year, we really saw a big increase in builders and new construction offering incentives. And when I was looking today, I was having trouble finding new construction that had offered incentives. So I think we're already starting to see some of the willingness that sellers and builders may have been to come off of pricing or negotiations already start to decrease. So just keep that in mind. I mean, it's anybody's guess still at this point, but I think it's a big possibility. All right. So completely different product here compared to this last one. This home is actually located in West Nashville in a suburb known as Bellevue. When people think of Bellevue in Nashville, they are thinking of families. They're thinking of soccer fields, parks, and it's just like a very well close-knit community. It's got one of the top-rated schools for elementary out that way. So a lot of people, definitely newer families, that's a market in place that they want to live in. So you get this giant house for actually $525 is the price on this. So that's well below the median pricing that we were seeing in the mid to high fives, but it's only about 25 minutes outside of downtown to the west of Nashville. But with this property and the desirability of this neighborhood, we're looking at closing expenses or cash to close needed somewhere around $173,000. That is factoring in a 30% down payment. That helps to get that rate down to where the numbers look much better, more desirable. But after your fixed monthly expenses, this one was cash flowing almost $350 a month.
Yeah, and Chris, just to point out too, you mentioned 30% down payment. For those of you that might be scratching your head and wondering, like, is that required? No, it is not required, right? For a single family home on an investment purchase, you can put as low as 20% down. The realities though are at that 20% down level, the interest rate will be higher, the loan amount will be higher, and therefore, if you're trying to get a property to break even or at least have it pay for itself, that will become a much larger or much bigger challenge. So that's why these larger down payments are really helpful when it comes to getting numbers to function from a cash flow standpoint. I'll let Chris kind of cover the next property, but I then want to point out kind of the return on investment metric there at the bottom and how that's relevant and what that kind of entails.
Definitely. And again, I just want to remind everyone that is not maybe familiar with Nashville or this area that some of the properties that we're looking at tonight are, again, maybe not a great fit. So if we can connect for a call, we can definitely tailor and look for properties that would fit your budget specifically. But Nashville is a market where the investors that I work with that purchase there are really future oriented. You know, they're thinking about the appreciation potential when they look at the development and growth coming to the area. So that's the other piece of the puzzle, that if you want something that has a high chance of appreciating quite a bit, that's going to just lend to a higher price point. And if you're looking for more cash flow, then that's where we need to look in some of the more outlying areas. All right, so this one is a brand new construction. I wanted to show you this example because I don't know about nationwide, but in Nashville, this style property that we're looking at right here is very common. Locally, it's known as an HPR. It's a fancy term for two homes on one lot. The property is not a duplex because each unit is deeded separately. So we have investors who have purchased properties like the one we're looking at here, who purchased both sides. So it functions for them as a duplex, but for this particular property, we're just looking at unit A, which is only one of these two units. So unit A, it's priced at $573,000. This is located in the heart of East Nashville. And if you've not been to Nashville or East Nashville, it is a very desirable area. It's very eclectic. There's lots of various events and festivals throughout the year in that part of town. And it is definitely catering to the more the younger demographic. So this property was also estimated to rent close to the same as the last one, around $350,000. But the price point due to the location is much higher. So this one's $573,900, but after fixed expenses, this one still showed positive cash flow at around $200 a month.
Yeah, and as Chris has been pointing out cash flow, right? But in it, previously he mentioned that appreciation, and Nashville has been an example market for growth and appreciation. So how do we factor that in? So based on projections, based on our website, and our website's going to show a more robust editable version of these calculations. For the presentation tonight, we have to put this on a PDF, and this is the format that we come up with. But you'll see that on our website, all of these calculations have a function symbol next to them, and you can see how we arrive at these figures. But one thing I wanted to point out towards the bottom, it says 15-year projected profit and 15-year annual ROI. So basically the 15-year projected profit is, as you can imagine, assuming you've held the home for 15 years, it factors in your appreciation, your principal pay down, right? And then is going to also back out your selling expenses, right? So what it would cost to sell the home, as well as your cash flow, right? But in this scenario, it factors in the cash flow after all expenses. So that's actually working against you in this case, because you'll see it's a negative number when you factor in maintenance and vacancy and leasing fees. So nonetheless, these returns are also not taking into account rental increases. So it's ultra conservative in that aspect, But basically what this is telling you is your annual average return will be about 16.7% on your money if you were to hold the property for 15 years with no rental increases, assuming that it increases at the, at the rate that we've, described. So I think that the way that we structure this does give the investor, like I said, a very conservative approach, but this is the real a draw, right? So alongside of your return on investment as a property owner, for those of you that own property, there's a lot of advantages from a tax standpoint, right? And your CPA can go over those in more detail, but depreciation is critical as well. So you have depreciation, appreciation, and then the fact for rental increases, which none of those things are really identified here. So those are some of the other interesting draws to owning as well.
Yeah, it's definitely a lot to consider. And again, when I'm going over property examples with clients, it's always great to connect with an advisor like Vince, or an agent like myself that can really help you break all that down, because it can be a little confusing if you're not familiar with running all of these various numbers. So love to connect with you guys, make sure we're looking at all the numbers accurately.
Chris, we had a really quick question come in just on geography of that property, just kind of coordinates. You said it was did you say it was on the east side of Nashville?
Correct. So if you were heading towards that development that we looked at that showed where the new Titan Stadium was going to be, the new Oracle facility, you just continue a little bit further past that. And really when you cross over the river out of downtown, that starts and is considered East Nashville.
Awesome. Thank you.
Yep. And for proximity distance sake, this house is probably only around 7 to 10 minutes outside of downtown. All right, last property, also new construction for us to just take a glance at this evening. This one is also new construction, just like the last one, but this was one house on one lot, which some people just prefer that style. So this one was still under construction, but the list price was $517,900. The rent for this area is, this is ballparked because there weren't actual comps. The photo we're looking at here is actually just a rendering. That's not the final look of this property, but without having exact rental comps for this neighborhood and just looking at similar homes around there, we're looking at somewhere around 3,200. I did see some as high as 3,500, but again, I like to be very conservative when I'm running these numbers. So renting this one at 3,200 after all your fixed expenses gets you a brand new home, tenant occupied, and you're getting a check for around $179 a month. So one perk too that I didn't mention, and want to make sure just to throw the comparison out there, is if we're looking at new construction, we actually aren't going to have any repair costs in that first 12 months. Knock on wood, but there is a full 12-month builder's warranty that we get that covers everything from the roof to the foundation. So if it's not tenant damage, like if there's something that breaks and it's part of the home, then during that first year, you're going to have that coverage from the builder who's going to be able to come out and take care of that for you at no cost. So that's a little bit of peace of mind on your maintenance expenses for that first year. But even going into year 2, 3, 4, 5, you shouldn't really have much maintenance. Now, when we're contrasting that with a existing home where maybe cash flow looks better, price point was lower, you may be hit with some unexpected maintenance that is just part of having an older home. So those are a few pieces of the puzzle that I just like to point out when people are assessing these properties, that new properties are going to have higher taxes, they're going to be more expensive, but the offset of not having maintenance costs could actually make that a better investment in some cases. Cool. Vince, that was the last property that I've got to cover tonight.
Awesome, Chris. That was super helpful. And just as we wrap up tonight, guys, I just wanted to quickly go over property management. Again, such a critical piece to the puzzle. And most of the investors and folks that we're talking to are probably not located in Nashville, right? And that even if you are, it makes the scalability and the ability, or I should just say the ability to purchase and manage properties much easier and much more functional is by hiring a professional property manager. But at the end of the day, like what does a property manager do, right? And you know, I think the simplest form is we enforce the lease, right? We ensure that the lease is enforced and we are able to collect rent from tenants, right? And it's important to know the rental laws and the proper disclosures. And you know, ultimately our job is to also keep you out of any kind of hot water with tenants, right? There's obviously laws that are constantly changing and updated, and being aware of that and just to make sure we're handling everything appropriately is a key component. You know, as someone who has properties under management with Marshall Reddick, like I said myself, it's great for me to know that Marshall Reddick only you know, makes money when, I only pay a management fee when I have a tenant in place, right? So vacant units, we are not charging for a management fee. And, you know, I can't say that's the same for all management companies across the country, right? There are many management fees that charge your monthly fee, whether it's occupied or vacant. And you ask yourself, what's the incentive to place a tenant? And there's really not. And Marshall Reddick definitely takes a different approach to that, which is really helpful. And you know, basically for all of our vendors, right, we have a long list of very qualified and certified vendors that we work with, and we give them a lot of business. So there's a couple of really key benefits there. One is we have great pricing, but two, as you know, they don't work for Marshall Reddick. The vendors are not part of Marshall Reddick's you know, payroll. So ultimately, there's no conflict of interest in the sense of we do not profit at all from any repairs or maintenance items. So that's good for you guys to know, because I'm sure there's folks on this call that may have an experience with property management where there's a lot of maintenance, and you come to find out that that maintenance company actually is owned by the management company, that the maintenance division is owned by the property management company, and that is not the case for us. So that is separate, but we have really key individuals or key vendors that can give great pricing and make sure that things are up to par. And if you don't like any of that pricing or there's an issue with it, we're happy to get other quotes and other bids. So not to mention the software involved is really helpful for those of you that have multiple properties that are tracking things, you know, in various places. It's really nice to have all the financials and the lease agreements and all the details along with the property. So that's a little bit more. As you can see, I have our fees highlighted here. So we have it for single families up to 4 units, 8% monthly management. That scales down as you get into larger multifamily buildings. We have a 50% leasing fee. So that is paid to our leasing agent only on vacant units. So to place tenants, we take 50% of the first month's rent. And then we have a 15% renewal fee. So those are some of the pretty straightforward fees that we have. It's not a huge profit center. It's just more of a way for us to stay in touch and ensure that the properties we're you know, helping our clients buy are functioning and operating the way we've, you know, described. For those of you that you know, I know that you guys are taking the time on a Tuesday evening to listen to this webinar. I'm sure that you guys are fans of education. I wanted to make sure to provide more value. We have our free ebooks, or I'm sorry, our data packets that you can find on our website. The link is below if you're ever interested in reading this. This is going to give you some more, you know, data and demographics on the market. Chris covered a lot of it. For those of you that want to dig into it and learn more and just kind of dive into some of the nuts and bolts of Nashville, this is a really good place to get that information. So that's, again, free on our website, and I'm happy to send that if anybody needs it. Also, I am going to be doing some follow-up calls this week, right? Just more of a check-in. Wanted to, you know, obviously thank you guys for all attending, but also to understand what brought you to the presentation. If there was anything that we didn't cover that I can help with, basically going over the who, what, when, where, and why. We just want to find out how we can help put you in a better position to achieve your goals, and that's ultimately our job, right? So yeah, you'll be hearing from me this week and potentially connecting with Chris if you wanted to talk about more of Tennessee for that matter, but Nashville, Clarksville, wherever in Tennessee that we're operational in. My contact information is here. Again, my name is Vince Tomich, advisor and agent here in our Southern California office. So again, I help with clients who are looking to invest, whether it's here, whether it's in one of our out-of-state markets, connecting you with awesome guys like Chris, our preferred lenders, insurance folks. So basically, another partner along this process, and ultimately trying to make this investing idea become a reality. So my contact information is here. Again, wanted to thank you guys all so much for taking the time tonight. And Chris, obviously, thank you so much for all of the information and wisdom that you were able to provide. This was super helpful and a really great presentation. So thank you, and thank you everybody who joined this evening.
Yeah, thanks everybody, and hope to connect. Have a great night.
Thank you.